What's going on, everybody? Welcome back to my channel. So on today's video, we're going to be talking about how to identify when a trend is ending. Now, there's no secret sauce to this, so I don't want anybody to get any ideas and start thinking you can take the tops or sell the tops and buy the bottoms. You need to wait for confirmation, and this video right here is going to give this to you, or at least something to work on. So let's start the session. We're just going to press play. Now, we can clearly see with this market structure, we're moving to the upside. Now, everybody should know in an uptrend, the market pushes up and it pulls back. And on the way down, it will make a higher low. Now, when the market makes a higher low, what we're expecting the market to do is to continue pushing up to make a higher high. Now, once the market makes that higher high, that is then a sign to us that the market is continuing a trend. Now, here in this example, what we see here is price action making that higher low. But just above, we have the higher high that's failing to break above. Now, this is not a sign yet that we're entering a reversal. But what it is a sign of is that at this moment in time, there is a lack of bullish pressure. So one or two things is going to happen. Price is going to continue to push to the downside. We're going to pull back and we're going to have a continuation for this reversal. Or if price continues to trade above this level, then what we're going to be looking for is for this market to continue to the upside. So now we're just waiting for that evidence and confirmation. Now, taking a sell at the top here is not wise because we have a range where price could come back to and bounce off. If price bounces off of this level, then the chances are that there's still bulls in the market. So what we could suspect happen is the market will continue to go to the upside. So what we thought would have been a trend reversal here has now been invalidated because price is now broken above this structure. If price was holding below the previous structure high with this double top and broke the previous structure, then we'll be in for a good chance of a reversal. But now, as you can see, the market's continuing to the upside. So again, what does the market do in an uptrend? It makes higher highs and higher lows. So that's what we're watching right now. Price has made the higher high. We expect a slight exhaustion on this market, a pullback before the continuation. Now, once we have that continuation, again, we're mindful that we don't take buys at these levels, just in case the market doesn't continue to push up. We're waiting for it to pull back. Now, when the market pulls back, what we're looking at here is a structural higher high. Now, once the market has made the higher low, what we're expecting the market to do is continue to the upside. Now, how do we identify that higher low? Well, we can see here we have 8 hours worth of information to indicate that this potentially could have been the higher low. With this bullish pressure indicated here in these candles, we should suspect the market can continue to go to the upside. Why is that? Well, when a trend is up, a trend is up. Now what we have to monitor at this stage is the market in for a reversal? Because what we can see here is the market has exhausted to create that higher low, but failed to hold this level and now has broken below the structure. So now we need to see if the market is going to pull back for a double top to get that reaction to form a lower high, or are we just taking a really strong pullback before we continue to the upside? Well, let's continue. This is going to be our first example of how to identify a trend reversal. So let's continue to see what happens. We want to see price continue to push higher than the previous structural low, which is this level here. Now, as you can see, price is failing to break above the previous structural low, and we can see that we're now starting to form a different kind of structure. Here we have the structural higher high, the higher low, the break below this structure, and now the retest of this level. And this is a very good sign that the market is potentially reversing. Because notice, on the way up here with this uptrend, we never made a lower high. We made a double top, but we never broke the previous structural lows. We had this continuation up. We have this higher high and higher low. We never had the higher high, and now we have the break below structure. And now we can see price coming back into that structure, not breaking back above it, but respecting it with strong bearish pressure. So let's see what happens if we take this trade as our first example of identifying a trend reversal. We expect the market to continue to go to the downside because we now see the lower high that has been formed. We also see that price has broken the trend line. At the same time, we've also seen that the market has retested a previous structure level, which means that if we don't have that break back into structure, there is a very strong sign that the bears are in the market. So let's let this play out. We're not going to go to break even. We've just gone to a 1-to-3 risk reward ratio, and we're just going to run this to see how this moves. Now, as you can see, as this trade's playing out, what are we forming on the way down? We're forming these lower highs. Now, don't worry about the price breaking above this structure. And the reason why, look back at this example here. We don't suspect a trend reversal to be in play unless price breaks above this structure to the upside. So as you can see here, we're respecting it. Just like in this uptrend, we had the higher low, price failing to break to make the higher high. But at the same time, in this bullish structure and trend, we're not breaking the lows. In this bearish structure, this lower high, lower high, lower high, we're not breaking above. And this is a very good sign that the bears are still in control of this market. So we don't suspect price to break this structure. So should we be worried or should we be shaken out? Absolutely not. Look how price is respecting this level. Let's continue with this structure to the downside and let's see what happens. So as you can see, the bearish momentum kicks back in and we continue this move to the downside. Now the question is, how do you identify this trend reversal from this bearish structure? Well, that's going to be the second example that we're going to take a look at in a second. Now we've hit TP on our first example. Now understand this. The pattern that we're trying to identify here is the market showing signs of price breaking previous structure higher lows, creating a new low, and then pulling back to that previous structure for a retest, and then looking for that bearish pressure. And as you can see, we have this example here that played out pretty well. Now let's continue this and look at another example. Now we can see that the market is clearly in a downtrend. Now if we're looking for bullish reversal or for this bearish trend to turn to bullish, what we're going to be looking for is for the market to respect some of these previous structural lows. Just like we had an example over here. If the market's going to reverse, then we don't suspect that the market's going to break these structural lows. If the market breaks these structural lows, then this is a very strong sign we are still in a sell-buy structure. So what we'll continue to do is just wait until the market creates that low, pulls back, and then we'll see how the market reacts to that low once it leaves it. So again, we have this market structure low again. Let's drop this in. Now, are we just willy-nilly picking this level and saying this is where the reversal is going to happen? No. What you have to understand is that the market moves in phases. And if the market moves to the upside over a long period of time or to the downside for a long period of time, then there is a very high chance that the market's going to reverse. Why? Well, the phase of this market on the 4H time frame is roughly around 2 to 3 daily candles. How often do you see the market continue to push up without a pullback? Likewise, this downtrend is a representative of 2 to 3 daily candles. How often do you see the bearish move on a daily time frame push to the downside longer than 3, 4, 5 days without having a pullback? It's very unlikely. So this is what we're gathering to now start to figure out if we're going to have this reversal. So back to pattern number 2. We need to identify if price is going to respect this low or are we going to break it. If we start to respect it, then that means that the bears are depleting with this sell-buy structure, potentially taking off some of their profits, and now we can see a surge of buyers stepping into the market. Now look here at this example. We can see price is not breaking the structure. How many times have we seen price not being able to break the structure in the past? We haven't at all. So this is a very strong reversal sign. Now, what shall we do? Well, in order to continue this buy-buy structure or to identify this reversal and look for this buy-buy structure, we need to see price start to take out some of its structural highs. If it's able to take out some of its structural highs, then this is a strong sign that who's in the market? The bulls. If we continue to push to the downside and we break this structure, then that is a strong sign that the bears are still in control. Now look here to the left, price wasn't able to break above or close above this structure for a very long period of time. This candle may not signify a lot because of the bearish pressure, but look how price has finally broken above this key level. So what are we looking for now? Well, we're looking for price to come back to this level to indicate bearish pressure again, and then to see how this level holds. If this level holds, then this is a very strong sign that there's a reversal in play, because previously what we've seen is in this bearish trend, the market continues to go down. How often have we seen the market make higher highs on the way up? Including the higher highs, we have the break above structure. So let's see how the market reacts. Is the market going to continue to respect this level? It clearly is. And if we remove this line and take a look at what the structure is doing, we have price failing to break above this low. We have a higher low within this range, and then the retest of this level higher low. And now we have a strong sign of bullish pressure here. So if we take this trade with this bullish pressure, doesn't mean that we're going to be right in this bias, but what it does mean is that our chances of winning this trade in terms of the reversal is much higher than taking it up and around these levels here, because now we have confluence in our favor. So let's take the trade and see what happens. We'll either win this trade or we'll lose this trade, and that's just part of trading. So let's send this back to make sure that it's clear. So now we're just expecting the market to continue doing what it's doing, which is making higher highs and higher lows. If the market continues to make higher lows, then there's a very good sign that the market's going to continue up. If the market is not going to continue to make that higher lows and fails to break above structure, then again, we revert back to what we had here. Let's continue to see what happens with this trade. Do we end up winning it, or do we have the reversal before this trade is won? Now we can see price has now made the higher high, pulling back to make the higher low, and now we can see price breaking below these previous structures. Now, do you remember this? We saw this pattern over here, price breaking below the previous structures. What we need to monitor for now is how price comes back to retest some of these levels to see if we're going to continue with this bullish structure. Let's see what happens here. So price is now pulling back, and now look what we have. Price attempted to come back to this level, but look at the bearish pressure that's entered the market. At this stage, it's probably a very good sign to trail your stop below the major structure higher low. This then ensures that you secure some profits and that you're not risking this whole move to the upside based on this reversal pattern. And as you can see with this reversal pattern, what has happened is price made a higher low with 8 hours worth of information to indicate that this level potentially is going to hold as a higher low, so we expect the higher high, has failed to make that, and now we have this bearish candle to the downside, breaking the previous low, and we're not able to push up or sustain that bullish pressure. Let's see what happens. We continue to hold at this level, and now look at the bearish pressure. So here we have our trade in break-even profits, but here we also have a sign of that reversal again, which was indicated over here. Strong bullish pressure, higher low structure forming, higher highs forming, and then all of a sudden we now have this reversal lower high, and look, we have strong bearish pressure in the market. So it's safe to say that we're more than likely going to continue to the downside than we are to the upside, and we can safely take this trade as a sell. Again, do we know that this trade is going to win? Absolutely not. But what we do know is that there's a high chance that the reversal is in play due to the history that we've seen over here, the example that we've seen here, and the example that we've seen here. So for that reason, we're going to take the trade as a sell, and we're going to see what happens. So look here, price came back to this higher low. We weren't able to break it, but we managed to take our second trade with some profits. Now, let's see if this trade plays out with this reversal pattern that we're learning today. So price is coming back. This is expected. Always expect the market to pull back. Now, again, remember this. As long as price does not break this previous structural high in this reversal pattern, then the likelihood of price continuing to go down is very high. And look here, we have our stop loss above structure. So now, even if it pulls back, we suffer a bit of drawdown, we still trust our analysis based on past history that this reversal pattern is more bearish than it is bullish, and we just take the trade systematically and we see what's happening. At this moment in time, we don't have any signs of any reversals. We're still making, as you can see here, structural lower highs, breaking below previous structures, and now all we're expecting the market to do is continue pushing to the downside. Again, we've broken the previous structural lower high. As you can see here, price was sitting at this level for about 12 hours, and we've now made a new lower low. At this moment in time, there is no signs of a reversal, and we continue to take this trade as long as price does not break above this previous structure. So let's continue to see what happens. As long as price stays below it, we're still good for sells. And this is a very good way to ensure that you're not shaken out of trades too early, no matter how long you've been sitting in this trade for. So take a look here. Price is failing to break above this structure, and it's failing to break below this structure. Are we entering a reversal? Well, we don't know. We're going to continue to hold this trade and see what happens. If the market is continuing in a bearish structure, then technically we should not be breaking above these levels here, because now we could be entering the reversal. So for that reason, what we're going to do in terms of our trade is we're just going to trail our stop loss into profits to make sure that if the market continues to push up, then at least we secure something in the bag. If this reversal is in play, then technically what the market will do is pull back to retest these levels, and we'll see the market continue up. So let's see what happens with this. We get stopped out in profits. So now the example that we've seen here, or 3 examples that we've seen here, is price stalling. If we fail to break, then we continue in the trend. If price makes a high, higher low, and then breaks that higher low and makes a lower high, we have a reversal. If the market makes a double bottom, breaks above the previous structure and respects that as a higher low, we reverse in the market. If the market's pushing to the upside, we break below the previous low, indicating bearish pressure, and then make a lower high, we change to a sell-buy structure. And again, if we consolidate and we don't break the previous low and start breaking the previous highs, then there's a strong sign that we're reversing to the upside. So I hope these examples were of use to you. They're very, very, very powerful. This is simple market structure and behavioral trading. And I really hope that you're learning from this so that you can apply this with your strategy or your approach to the markets. As I always say, if you've enjoyed this content, please smash that like button, subscribe if you haven't, and until next time, take care.